Hey traders, this is Ron Haidt at Markets Hammer. Happy Sunday. Hope you guys are having a fantastic weekend. As always, everything in this presentation is for educational purposes only. All right, I'm doing this video at 7:07 p.m. Eastern on purpose. I wanted to see how the market would open about 1 hour's worth of time, and that's where we sit right now. We sold off hard on Friday. Asian markets were a little wild and woolly, and now we're also pushing lower. On Friday on the SPY, we did not get below the 280-250. We're still holding that area. If you're following SPX, similar story. We did not get below 28.25. Well, if I take out SPX and we click the charts inside Thinkorswim, this is a 5-minute chart of the ES, which are the S&P futures. You can see we gapped down, got as low as 28.10, and now we're sort of just going sideways, starting to push a little higher. If you're going to watch this 5-minute chart overnight, as soon as the 5-minute candle closes into the gap up, or gap fill becomes the target. If we get below 28.10, that opens the door to a new round of selling pressure. So as it stands now, what are we down? About 31 points on the ES. That's about $3. I'm just ballparking this. $3 on SPY. Let's change this to SPY. I will zoom in, and $3 lower is what? 281, right? That is going to put us below the 280-250 area I said to watch, but that's only right now. So much can change until the morning comes around. But as it stands now, the next major target's down in that 270-250 area, even overnight right now on the ES, or it would be the S&P. You can see why this 50-day moving average in orange was so critical. You know, nothing is ever going to work 100% of the time. Technical analysis, algorithms, nothing. But it is remarkable, time and time again as I do these videos, it is a litmus test if the bulls are feeling confident or if not confident. If we're above the 50-day on a closing basis, the markets are viewed bullish. That's an institutional moving average. That's why it's so important. And if we can't get above it, that shows you the rally is weak. Well, look what happened once we got below it. Sure, we got above it one time, then right back below it. And what turned out to be the 20-day coming in there too as resistance. Now we come up 1, 2, 3 days. We could not get above it, and now we roll over. This is a box. Right now we're breaking that box, but because this is a daily chart on the SPY, it only records price action from 9:30 a.m. to 4 p.m. Eastern, and that's what I prefer to use because I'm not intraday trading personally. If I was an intraday trader, I'd be paying attention right now looking for trading opportunities. That's not what I want to do. So as we open tomorrow, if we end up opening down here, there's the target. If we close somewhere down here, there's the target. If we get below 270-250, that is really bad news for the bulls, as I've been telling you. The next major support would be all the way down here from the December 24th massacre, if you will. Not saying we're ever going to get there, but you can see we could not get above, and then all of a sudden Friday happens. If you watch these videos and just pay attention to the 50-day, you know, chances are you probably didn't get hurt, right? There was no reason to get super bullish yet, or even any bullish until we get at least above that 50-day. And that's just technical analysis 101. It's nothing special, unique. It just is what it is. It's a great line in the sand. If we take a look at the diamonds, here's the DIA. Notice how it never even got up there to challenge the 50-day. Once we got below it, the Dow was perfect in terms of technical analysis. S&P had that one day here where we got above it, but not the Dow. Now the Dow, let's go check out actually the YMs. / Y is in yellow, M is in Mary. If I go ahead and zoom in here, we'll see it. There's the gap on the Dow. The low right now is 25,266. We're up here at 25,389. We're about 120 points, 30 points or so off the lows, still being contained in this candle. If I was going to watch this overnight, or those of you that are awake down under in Australia, for example, in the beautiful city of Sydney, we close above here, we're going to come up here. We get below here, then you look for new lows. Same thing. Brisbane as well, and Cairns. We were there 2 years ago, had a wonderful time. The Australian people were amazing. All right, now, enough about that. So there's the Dow. If we take a look at the Qs, the QQQ on Friday, they too got above the 50-day a couple times like the S&P, actually one more time than the S&P, but we couldn't get back above the 20. When the 20-day EMA in red and 50-day SMA in orange are together, it creates confluence, almost like any technical analysis tool you guys might be using, and we just couldn't get any staying power. But also notice the horizontal price. Whether it was a moving average or a price line there, you can't get over it. It was really interesting. We come right back down. You want to watch 180, we get below 180, then the June lows would be the target. If I take a look at the IWM, which is the Russell 2000, remember, its highs are way, way, way back there over a year ago. almost a year ago. We've been having trouble with this 158, 160 area, and then look what it did. Here's the flagpole. There's the flag. On Friday, we didn't close below, but man, it was close. What was the close there on 815? 145.49. Actually, we did 6 cents below. How funny is that? Not funny if you're a bull. Once we lose 145, boom, December lows. There's nothing in between. This is all what I call free range chicken territory. A little bugger can just run free. There's nothing to stop it. There were no major reversals. There were no swing lows where we tried to sell off and the bulls came in. There was a spike in volume or something. No, 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 no. You lose 145, you got nothing. It would take maybe some economic event, policy from either the Fed, government, something maybe to potentially turn it around. Otherwise, that would be the target. Or I guess you're probably thinking, well, what could potentially cause a turnaround? If we had 3 or 4 days of just, big, massive selling, maybe we get a hammer, a reversal before we get down here. If a hammer were to form between 145 and 125, it might be believable if it's followed by a positive up day. And I'll keep an eye on that for you. Right now, it's not looking good for Monday. The sellers have the edge. Bears rule the roost as of right now. Even if we get a reversal overnight, the charts are all bearish on the indexes. And that's why I told you guys again, keep an eye on that 50-day. All right, let's take a look at VIX. Excuse me, dollar sign VIX, not pound sign. Here's it's an exciting candle if you're a bull, exciting price action. If you're a bear, I'm sorry, if you're a bull on the VIX, it's exciting. Bear on equities, it's exciting. If you're a bull on equities, you do not like this. Look at this pop. You are not, if I were to bring in the 2 standard deviation Bollinger Bands, we wouldn't be outside of them. This was just a 1-day pop. If we get more selling on Monday, this thing could end up all the way up here. Maybe then we could look for potential reversal if we get a massive, massive move. But even after Friday's move, the VIX did not jump, I would say, equally or as much as. Bad sign for the stock bulls. Here is the semiconductors. Remember I told you guys keep an eye on those highs in probably Wednesday or Thursday's video, right around 114 or so. 115 would clear it, and we just couldn't get any staying power, right? Doji, couldn't go anywhere, and then the bottom falls out. We lose 107. There's a little bit of a reversal here, but the real target would be 97.50. There's more candles at that price level. If we take a look at the transports, they've been having trouble. Their high is all the way back there. We're holding 175. Just check this out. 175. We dip our toe in the water, bounce. Dipped our toe in the water Friday, bounced. You keep knocking at that door, eventually that door opens, is the theory. Below 175, guys, I'd say 160 to 155, somewhere down here. Big drop. See, there's this air pocket, and that's what's going to be really curious to see what happens Monday. If we just open and everybody just wants to sell stock, because of course, the world's going to end on tariffs. If you guys do your homework on tariffs, if you just want a personal thing, the amount of tariffs they're talking about is so insignificant to the overall economy in terms of percentages. It's not even 1%. It's not even 0.5% when they start talking about some of these taxes. It's incredibly small. I just leave that with you. Go do some due diligence. But when they run the headline, it's just one more reason why not to watch the news. But here's the thing. Trade what you see, not what you think, right? Trade what you see, not what you hear. Regardless of how the media keeps playing these tariffs and they just want to call it the end of the world stuff, we've been hearing this since October. The market sold off many times. Maybe it's going to be used as a weapon here, and we're going to sell off again. All I can say is it's probably going to be, in my opinion, we'll see, one heck of a buying opportunity, just like it's been in the past. That's just my opinion. That's not advice. But when they say, oh, we're going to launch another 100 billion in tariffs, it sounds like a lot, but when you compare it against the US economy, it's nothing. That's how insane this is. But the trend is down. No reason to be bullish right now. Across the major indexes. Now, there could be individual stocks that hold up just fine, like Salesforce or something due to earnings. That's different, but I'm talking about the major indexes. Here are the banks. Watch this level at 26 bucks. We get below there. There is a bit of reversal here, just over 25, but then we come back down here. I was reading an article on Zero Hedge, and it talked about QE4. And there was another article they talked about a couple days prior. And if you look at the report on zerohedge.com, they provide some interesting analysis, according to the author. And you could make an argument and say, did they just start QE4? That should be bullish for stocks. But again, it's not what should be bullish or bearish. It's how is the market going to react to it. So we'll just see what happens this week. It should make for an exciting Monday video. I covered some global ETFs this past week as well. EM was down Friday. There's a lot of chop down here. So from a downside perspective, there really isn't much left before it comes into support. If you go look at Brazil, you want to watch this 36 area because it ties in with 36 from December. And then the next target's down here at 30. If you want to look at FXI, which is China, watch 3750. I'm going to have to go to 2 years on China. You can see how important that 37.5 or so is. If I go 5 years on FXI, now you see it. Below 3750 on China, probably the next major low would be that 3250 back from 2016, beginning of 2017. So if you use China and the US as examples, there is some room under there, under our current prices, that price gap, that window for us to fall. And here's emerging markets going out 5 years, watch 3750, and then you fall down to 3250. Lots of little air gaps. All right, let's take a quick peek here. And wow, this video is getting long. Sorry about that. Just a lot I wanted to talk about with potentially some excitement for Monday. Gold breaking out. I would consider to use the red line, which is a 20-day EMA here on the daily chart. Gold went up to new near-term highs. Silver actually coming along here, new near-term highs. It had a strong day on Friday. Gold miners did not break out to new highs. A little bit of divergence, but their 20-day hasn't worked here. You see how we closed below it, but then the next day we had bullish engulfing. Okay, that worked. Oh, but then it stops you out for one day and you're back in. Try a 30-day, otherwise go with a 50-day. Sometimes you can modify this a little bit if you keep getting stopped out. It seems like they're purposely running the 20-day here as a stop out. And bonds, TLT, they popped up on Friday, not new near-term highs, but they also went bullish. Apple, how goes Apple, so goes sort of the stock market because it's held so widely. This was the consolidation a year ago in November before we had our November-December sell-off. That ledge where we fell off of, there must be a bunch of people holding because when we get back up there in May, the end of July, beginning of this month, and then most recently, it is putting a ceiling on that stock. What my guess is this overhead supply is just capping this and now we're rolling over. We did close just beneath by like a penny, I think it was, the 50-day. Watch this 193 area below there, then we come back down here to May at 175. HAS is Hasbro. Bad news on Friday. They gapped lower. I had a question on this. You did close below barely the lows from June. Your next target on Hasbro will be 95, and then a gap fill all the way down to 90. I had some questions on Amazon, Netflix, and Google as well, and we'll end there. But Google had the nice gap up, but then it gave it all back, right? And then it's just been chop. If it loses the 50-day, just go back to swing lows at 11 and a quarter, 1075, and then down maybe 1,030. Amazon never followed the market higher. Not that it needs to. I mean, I think Apple's more of a canary in the coal mine than Amazon is. But look at this beautiful bear flag. There's the flagpole. It traces out, hits the 50-day. It actually completes bearish engulfing on Thursday. There is an amazing opportunity when you see rejection of moving average and then you get bearish engulfing. Now the volume wasn't there. That was the one thing that was missing, but it was higher than the previous day. It just sets up for a great potential short trade idea. Bearish, I wouldn't short stock. But via bear calls, long puts potentially, practice in a paper trading account. But when you see bear flags trace out like that, there's the flagpole, there's the big drop. Chop. It's going sideways. Hits a moving average, rejects, creates bearish engulfing. Really high probability potential trade ideas there. And then Netflix, this thing's been bearish since the earnings gap down. It's never gotten above the red line, not once. We got into the gap and then it just keeps going lower. We try to put in hammers and they keep failing. Netflix's next support, which I told you back when the gap down occurred from earnings, which would have been in July, it's all the way down at the December lows. Just like when it gapped down, it doesn't mean it's going to go straight there. There's going to be some folks that are going to try to come in and bottom fish. It rallies back up, tags some of the previous lows. People that bought there were wrong. They might have sold, which helped put a cap on that stock. Rolls over, people try to buy again at the previous low. It bounces, it dips below, it comes back up, catches up to people who bought here that were wrong. They then sell to get their money back, and then it just goes right back down. And it just is an endless loop. That loop doesn't end technically until the 230s. Crazy, right? So that is it. I'm going to keep this video short, stop it right now. 15 minutes is a long time. Hope you guys find this helpful. Wish you guys all the best. I will be back with you on Monday. Take care.